Gus Schmidt back with a new trading video. And today I'm on the platform Pocket Option, and I'm going to be trading some stock OTC pairs, some stocks. Uh, so I have my two moving averages that I'm going to be utilizing. The first moving average, which is the 10 exponential moving average. I've set which is the white line there. And the second moving average is going to be the 50 period EMA, exponential moving average, which is the red line. In addition to that, I have my candles set to 15 seconds, regular Japanese candles, and my trade time is going to be 1 minute. 1 minute expiry, so I have that set that way. Okay, so I'm going to pause the video and wait for a setup. Come back and explain the setup. Okay, quick side note here. I didn't take this trade because, as you see, the 10 EMA crossed the 50 EMA, and then when the retracement began, I didn't want to take this trade because we were coming across upon a level of resistance here with the three tops right here. So this is a situation where you don't want to take a trade like that. And sure enough, it didn't bounce off the 10 EMA. So let's hunt for another setup. Okay, so here's a situation where the 10 EMA crossed the 50 EMA, the white line crossed the red line there, 10 and 50 EMA. And then what I'm waiting for is that retracement back to the 10 EMA line. And when the price hits that line, I took a bullish trade. I took a buy trade right at that level because the price is respecting the line. And so let's wait for the trade to expire. Looking good. Okay, great. So we won that trade and increased our balance. All right, I'm going to pause the video and look for another setup. Another point I wanted to bring up is that whenever you see sharp down candles like this, like long candles, where the crossover occurred, but as you notice, when it retraced back, it didn't bounce off the 10 EMA. It just kept going up. So you would have lost this trade. So you want to avoid these kind of candles. It's, the second one here, where you have these really long, sharp candles, and instead of bouncing off that EMA, the 10 EMA, it pushed past, and this would have been a losing trade. So I just wanted to bring that to everybody's attention. But let's keep plugging away, looking for a setup. Okay, so I just took a trade on Facebook. And the reason why I did it was because, first of all, the crossover of the 10 and the 50 occurred. So we wait for that first retracement. And the the top candle here already broke that level of resistance. So let's, and so when the candle retraced back to the 10 EMA line there, I took the trade. So let's watch this trade. Boom. Actually, I took a couple of trades simultaneously, and they were all winners. Okay, see that? All these trades. I took several trades on Microsoft. I mean Facebook. Took a couple of trades on Facebook there. Okay, so let's pause the video and look for another setup. So we're 2 for 2. Okay, I'm on McDonald's, and first step, the 10 EMA, the white line crosses the 50 EMA. So it's building up, then it's sort of consolidating here, but it hasn't touched the price hasn't touched the line yet, the 10 EMA line. So I wait for that candle to hit the line, and then I'll take a bearish trade, a sell trade in that direction. Okay? So let's watch this trade. It's close. Great. So we won that trade. Okay? Excellent. So I'm going to close out the session here. We were able to, I believe we won 3 out of 3, and I showed you examples of where not to take trades. That's also important. This is a very powerful strategy. I've been using it for a few days, and I've managed to really grow my balance. And so if you like the video, please give it a thumbs up, subscribe to my channel, share the video with your friends, make comments about, you can comment in the video or comment in the description, or excuse me, make some comments and let me know what you think. Okay, thank you for watching. Gus Schmidt signing off.